What's up, team, and welcome back to another episode of the Sunday Stock Show. Today I'll be talking to you guys again about my top 5 picks for this week and moving forward. We're going to be going over 5 different stocks in different regions. There's a couple of them that you might be able to do a bit of parallel plays, so looking at some other stock shares in similar industries. And still make some money off that. But to narrow it down, I'm only going to talk about 5, but you guys can always post some questions in the comments, and I can always take a look at a couple of those stocks or write to me privately, and of course I'll take a look at them as well. So this video is for entertainment purposes only, and it's sci-fi time, so let's get into this. So the first stock that I want to talk about is going to be ticker symbol ORCL, which is Oracle. All right. So taking a look here at the chart, they've recently sold off because of earnings. They have been doing really good over the last 6 months, continuously breaking new highs, and here have recently sold off on June 16th because of earnings, right? So we saw this big red dip over here. They found themselves a good support line at about $75, $76 a share. Have slowly been pulling up a bit, fell into a consolidation here at about $77, $78 a share. Didn't do much, and then now have been getting good volume and have been running up very hard. So we played them a couple of times in our Discord group over the past couple of days. They've been having good 2-3% days, which is a very consistent return. If we go and take a look at how they've done in the past when they start to get this good momentum and volume in them, let's come and take a look at a couple of the runs that they've done in the past. So when they start to run, it's not only for one day and they sell off, they have a couple of consecutive days back to back. So here we saw a lot of green days, then the sell off, again a bit of consolidation, another big run, a lot of consecutive green days, bit of a sell off, consolidation, and here again another big run. So this run right here, right before the earnings, was very similar to what we're experiencing right now, right? What Oracle is going through. We had a big jump, another big jump, but it continued to run up. All right, so here we had a big jump, another big jump to 81. Honestly, I could see this going and breaking the new all-time high, or at least coming back to its 52-week high, which is at about $85 a share. There might be a bit of a resistance there. We might see a bit of a pullback or a bit of a consolidation. And if we break through, well, great. That's going to be a new 52-week high, and who knows how high it can go afterwards. All right, so I would be comfortable with trying to run this from about 81 to about 85 and possibly getting higher numbers with 86, 87. All right, so if we were to run it on a conservative basis to the $85 mark, that'll give us approximately a return of 4%. With options, that'll be very good. And I expect that to be more of a short-term play, so I think that's going to do that this move in this week. All right, so we might see a bit of consolidation possibly on Monday. It has had 2 big days, both on Thursday and Friday. But I do think that run is going to take place this week, so make sure to keep them on your watch list. The next stock that I want to take a look at is going to be ticker symbol CCL, which is Carnival Cruise Lines. All right, they've been struggling, right, all throughout COVID. We've had that whole closure. Airlines have struggled, cruises have struggled, the whole travel industry has struggled. Slowly have started to pull up since the COVID lows back last year in March. And we have been in this big trading pattern, right? It's been bouncing between this 24 and this high of about $30 a share. This is one of the stocks that I said that you can also play a parallel play. So Royal Caribbean, Norwegian are also stocks that have a very similar pattern to this. You can even go into some of the airlines like American Airlines, United Airlines, Delta, stuff like that. But today I'm only going to talk about Carnival. So Carnival has had good runs, and you can see a clear support and resistance over here, right? So they had a very strong support here at 24. And then they have a very strong resistance as well, either here at about $30 a share, and we've recently broken that resistance. So let's say our new resistance is here at about $31.50, $32 a share, right? So recently we have been pulling back. It has been selling off, not always a position that you want to get into. So because it has been selling off over the past couple of weeks, I can possibly see Carnival even coming lower to that $24 support that we just talked about, right? So in the past, it's always come down all the way down to that 24, bounced up, 24, bounced up, and then here again, that 24. So there is a possibility that this comes down to the 24. However, it is holding pretty strong up here at the 26. If it does continue to come down, just be a little patient. Enter it in at about 24, 24.50, and make sure that you see that reversal. If it begins to reverse right here at this 26, because it has found itself a new support, which is even at this 26, it still does have a pretty common support with it in the past, right? We see that it's bounced off that 26 multiple times, so there is also a good chance that it just begins to reverse from here on forward. You could put your confirmation level at about $27 a share. Once it breaks that 27, then I would be comfortable with saying that this could possibly run back up to about $30, $32 a share, if not break a new 52-week high. As we know, borders are opening up. COVID is starting, the restrictions on COVID are starting to diminish worldwide. So I expect these to start to do very well, especially over these summer months where people start to take a lot more vacation. So keep an eye on all of those travel industry stocks. All right, so the next stock I want to talk about, a very interesting one, Apple. It's been very quiet, right? You can day trade it a bit, but it's been very quiet over the past couple of months. Pretty much ever since its stock split, right? Back in August, it did the 4-to-1 stock split. But now we've been on a pretty good run that we've been having over the past couple of weeks, right? So since the beginning of June, we've seen this go up from about $123 a share to about $139, where it closed out on Friday. So clearly, with a very strong resistance at that 140, it's having trouble breaking that 140, but I do like it to continue running, right? So it has a lot of power, it has a lot of steam. People are starting to believe in it again because it was very quiet and not very volatile before. It's just a good, consistent stock. But now it's been running really strongly, right? Friday, we had almost a full 2% day, which is really big for Apple overall. Why do I like them? Well, they broke their strong resistance points. So they had a strong resistance here at about $138 a share. We broke that. They also had another little resistance here at about 139. We also broke that. So the next resistance that we're really looking at is at about $144, $145 a share. And running Apple from 140 to about 145, that's a very good move, as Apple doesn't move very much, and it is about $140, $150 stock. So that's a pretty expensive stock. And especially with options, that is a money-making machine. So keep an eye on them. I wouldn't be surprised if they do also pull back a little bit. After having a big run like this, they might pull back 0.5%, maybe 1%. Just like they've done in the past, right? Every time they run up, they do pull back, run up, pull back a little bit. So I do expect this to pull back just a tiny bit and then continue its run on forward. So try to grab it on a little bit of pullback if you can on possibly a red day. Where a day that Apple is down 0.5%, 1% or so, and then try to get into your position and ride it up to about $144 a share, which is something I expect to happen either this week or next week. So keep Apple on your watch list as well. The next one I want to take a look at is JMIA. This has been a very quiet stock. They had a big run back in the early, at the end of last year. So really in October, November, December, all of that, they were very aggressive. They ran as high as almost $70 a share. Right now, they haven't been doing very much, right? Ever since that NASDAQ pulled back, that big correction, JMIA hasn't ever really recovered. So this is not something that you're looking for a huge play on. This is going to be more of a short-term play, right? So really what I'm trying to do here is just following the patterns. We run up, we've pulled down. We're at a very common support here of about $27.50, $28 a share, something that we've seen it bounce off of several times in the past. All right, I'm just going to pull this up here a little bit. So here at this support level, it's bounced off it in the past and tends to run up. Not saying that this doesn't have to break this support and come lower. If it does, I do expect this to come down to about $22 a share. But if we do see this start to reverse, that would be a very good entry. You could put your confirmation of a reversal at about $28, $29 a share. And once you see that reversing, I would try to run this back up to about $32 or $34 a share, which still gives you a nice little profit margin, approximately, taking a look at here, from here 29 to there, that's about an 11% return. All right, so this could be both on stock shares if you want to play it a little safer, or on options. Now the last stock that I want to take a look at is going to be ticker symbol TCOM, which is TCOM. What do I like about them? Again, a bit with that travel industry, right? This is trip.com, but I'm not really going to go into the actual travels. I'm going into the service this time. And as we know, people tend to travel a lot more in the summer. People tend to do a lot more of their bookings. And as I said before, restrictions are diminishing globally. So these are part of the travel industry stocks and can do very well as well. So here we're sitting at a very strong support, something that I came down to and touched in the past. And here we've been consolidating here. I would definitely wait for a confirmation of reversal because it could be another week or so before this really moves, and it could just continue to consolidate, and you don't want your money to be sitting in there as dead money either. But if you see this start to reverse upwards, and you could possibly put your confirmation level at about 37.50 a share. Once it breaks that 37, you could try to run this back up to about 40 or possibly $42 a share, which is its next strong resistance. So running it up from about 37 to 42 would give you a return of about, again, 11.5%. So those are my top 5 picks for this week. Don't forget how important it is to wait for that confirmation of a reversal, because you don't want to buy the dip and it continue to dip and you be stuck holding at that point. So really just be a little patient. Even if you miss $1 or so or $2 on the stock price move, at least you are confident on what's going to happen, right? So we can't really see what's going to happen in the future. We can't see the future, right? But what we can do is prepare ourselves for the worst, right? And by doing so, we are protecting our money, preserving our capital, and entering in at the right time. So overall, if you enjoyed this video, please like, share, and smash that subscribe button. Leave any comments in the comments below section, and I'll make sure to answer them. And as always, enjoy the rest of your Sunday, and we'll see you tomorrow morning at 9 a.m. for our live trading. Have a good one, everybody, and it's sci-fi time.